Welcome! Today we are tackling a crucial concept in GST, the time of supply. Many people ask, why does this matter? Simply put, the time of supply is the specific date when your tax liability arises. It tells you exactly when the charging event has occurred, so you know in which month you need to report and pay your taxes.
So it's basically the when of the tax?
Exactly. And because goods and services work differently, the law has separate rules for each.
Let's start with goods. For most regular taxpayers, except those under the composition scheme, the rule is quite simple now. The time of supply is the date the invoice is issued or the last date by which the invoice should have been issued by law.
What about advances? If a customer pays me up front for a product, do I pay GST then?
Great question. Under Notification Number 66/2017, all taxpayers, except composition dealers, are exempted from paying GST on advances for goods. You only pay the tax when you actually issue the invoice.
And when must I issue that invoice?
For goods involving movement, you must issue it before or at the time of removal. In other cases, it's when you deliver or make the goods available to the recipient.
Now, services are a bit different. For services, we usually look for the earliest of these dates. 1, the date the invoice is issued, provided it's issued within 30 days of the service being provided. 2, the date of payment.
Wait, so for services, I do have to pay GST on advances?
Yes. For services, if you receive a payment before the invoice is issued, the date of payment becomes the time of supply.
How do I define the date of payment?
It's the earlier of 2 dates, when you enter the payment in your books of accounts or when the money is credited to your bank account.
What if I am the one buying and I'm responsible for paying the tax under reverse charge?
For goods under RCM, the time of supply is the earliest of the date you receive the goods, the date you make the payment, books or bank, whichever is earlier, the 31st day from the date the supplier issued the invoice. For services under RCM, it's the earliest of the date of payment, the 61st day from the date the supplier issued the invoice. However, if it is not possible to determine the time of supply in aforesaid manner, then the time of supply is the date of entry of the transaction in the books of accounts of the recipient of supply.
There are a few more interesting cases to keep in mind. Vouchers. If you issue a voucher for a specific item, like a spa treatment, the time of supply is the date of issue. If it's a general voucher, like a gift card for a department store, it's the date of redemption. Small excess payments. If a customer pays you up to 1,000 rupees extra, like rounding up a bill, you have the option to treat that extra amount as part of the next invoice's time of supply, rather than the current payment date. Interest or penalties. If you charge a customer a late fee or interest for delayed payment, the time of supply for that extra amount is simply the date you receive it.
This makes it much clearer. It's all about tracking invoices, payments, and specific deadlines.
Precisely. If you ever run into a situation where none of these rules seem to fit, the residual provision says the time of supply is the due date for filing the return if you file periodically, or the actual date of tax payment.
Stay organized with your records, and you'll always know exactly when your GST is due.
Thanks for joining us.